Indian commodity markets indeed is going through a transition phase, with market regulator Sebi now regulating the market for the past 8 months since September of 2015. What are the potential challenges, hurdles, or how has been the transition process? And Sebi indeed has also taken various steps when it comes to the equity markets. What is going to be the roadmap for market regulator Sebi in FY17? To discuss all that and much more in detail, we have with us a very special guest, Mr. Rajeev Agarwal, of the whole-time member of Sebi. Mr. Agarwal, firstly, thanks for sparing this time and speaking to ET Now.
It's my pleasure.
So you have been sailing the ship when it comes to the merger of FMC with market regulator Sebi. It's going to be 8 months now. How has it panned out, and what are the potential challenges do you see as you are implementing or merging the whole of commodities market with the equity markets?
As far as the merger of the commodity market regulator with the securities market regulator is concerned, it was a very unique event. I don't think it has happened anywhere else. Therefore, the process was very interesting, at the same time very challenging also. And the process started immediately after the budget announcement. So we had to make a preparation for taking over FMC. So we had to do a gap analysis, and for that, after doing the gap analysis, we had to go for various legislative changes and regulatory changes that we went through. And then we had to, after taking over, we had to integrate the data of the commodities market with our surveillance system. We had to upgrade the risk management system of the commodity exchanges. We had to improve the governance norms of the exchanges, and then various other measures like capacity building, because as you know that Sebi was not dealing with the commodities market, so therefore a new capacity had to be created. So all these areas we had to work on, and it was a very I would say interesting and challenging process, but we have come through a long way, but still there are challenges which we are trying to meet. For example, the three areas which are very important for us. Number one is that, as you know, that the commodities markets are very fragmented markets, and the price, the settlement mechanism is dependent on the spot price. So we have to capture the spot price for the settlement. At the moment, price polling is being done, but there are lacunas in that, because you know that there is hardly any market which is creating any benchmark price, because there are so many varieties of the commodities and they are being traded at different centers. So therefore, this is a very challenging task. We are working on that. We have got an advisory committee to advise us on this issue. There is a task force for that. The second issue is that we want to improve the quality of the delivery on the Indian exchanges, because that is most important for gaining the confidence of the investors and the users. So that was the reason why we brought this provision of good delivery in our regulation itself. We mandated the exchanges to ensure good delivery. So they have to build a good network of the warehouses. So that has to improve. And third thing is that we have to bring in more and more hedgers to the market. The real users of the market have to come to the market in more and more numbers, so that the price discovery may be more reliable, more democratized, and also we are able to reap the real benefit of the market.
Shankar, very interesting, as you're rightly pointing out, price discovery has been the biggest challenge, particularly in the agro products, because still the general feeling or perception is that every mandi, if I could use that word rightly as it's called in the commodities market, is unfortunately dictated by 2-3 players, and thereby having an impact on that particular commodity of that particular mandi. So in that sense, what is going to be the way forward to ensure that the robustness in the price discovery comes, particularly on the agro side?
For that, the integration of the markets across the country has to take place. Of course, this is a very, very challenging process. But I would like to mention that the initiative taken by Government of India very recently of creating a national agricultural market, a sort of e-market, that may turn out to be a huge success, and that may remove many of our difficulties in discovering the spot price for the purpose of settlement.
Okay. So specifically coming to a recent case where Sebi has really cracked down on one of the commodities that is of castor seed on the NCDX. We all know what happened. An interim order has been just passed 3 days back. Is this going to be once again a big learning where a lot of institutional changes needs to be done in the commodity exchanges, as say what is available in an equity exchange at this point of time, and this is where the primary challenges will be for Sebi?
As far as the Castor incident is concerned, this was of course a learning process for the exchanges as well as the regulator. As we all know that the risk management system of the erstwhile commodity markets were not that robust. That was the reason for merger of FMC with Sebi. So we have to, we are in the process of rejigging the risk management system. So, but after the Castor incident, we have taken action on 4 fronts. Number one, we are trying to address the systemic issues. That is, for that purpose, we constituted a committee, constituted a task force which has already come out with the recommendations for improving the risk management system. The second area of action was that improving the governance of the exchanges. So we have already asked the board of the exchange to fix the responsibility and give us recommendation on that issue. Third was addressing the issue of market integrity or punishing the people who were trying to disturb the market equilibrium. So we have already passed an interim order through which we have banned various entities from the market.
And the other company.
And the fourth is addressing the public grievance, because there were many hedgers in the market who were having a grievance that they could not deliver because of the cancellation of the contract. So we advised the exchange to address their grievances, and exchange went for creating a platform for them for liquidating their stocks, and they have also gone for giving compensation to such hedgers.
Is Chana in that sense also a worry for Sebi? You are keeping a close eye?
Agricultural commodities are always a worry for the regulator, because it's a slightly sensitive area because it affects the common man. So only thing as a regulator we have to ensure is that market integrity is not breached. The price discovery is truthful, and there are no extraneous considerations in the price discovery. It is decided by demand and supply forces. So that is what we are trying to do in Chana also. But as an abundant caution, we have increased the margins substantially so that the speculative interest is reduced from the market. But I may mention that Chana is the only contract amongst the pulses which is trading on the exchanges, and the price rise in Chana is probably the least as far as the pulses are concerned. So I think the contract is running well. So it does not, of course, we are very cautious. Our surveillance system is also very cautious. We have alerted the exchanges also that we would not like to have any kind of instance of price manipulation.
Mr. Agarwal, very interesting. If I could touch upon this aspect. On one hand, you are trying to put the whole ecosystem in place, but on the other hand, would in that sense competition will also be a good option for the regulator? Primarily I'm asking this because we all know traditionally metals was MCX, and when it comes to agro, some products were there on NCDX. So say opening up this market, allowing more new players will also make maybe some arguments will say things easier for Sebi for getting in the best practices. So in that sense, do we see the process of issuing new licenses to get in more commodity exchanges set up in the country getting expedited? What is the line of thinking?
No, that is always there. I mean, regulator would always like to welcome the competition. And as far as the new licenses are concerned, the guidelines are already in place. So according to the guidelines, new licenses can always be issued, but there is no such special move for that. I mean, it depends upon the market players.
So would we see the first you would like to complete the whole transition process, say maybe September of 2016, and then you would allow say a NSE or a BSE to come out with new commodities exchange?
I think you are referring to the permission
exactly
to
what
launch
NSE,
commodity products on the stock exchanges and securities product
Correct.
on the commodity exchanges.
Correct.
Of course, that is the roadmap, but timelines I cannot define at this point of time.
What is going to be the largest, say, 1, 2, 3 things that you would like to be done in the commodities market, say, in the next 1 year time frame?
As I mentioned earlier also, that risk management is the biggest worry, because the markets, commodity markets, have to have much higher level of liquidity. So if till the time we gain that kind of liquidity, risk management will remain an issue. So that we are already working on that. So very shortly we will be coming out with significant steps to improve the risk management system. Number two, I mentioned that we would like more and more hedgers to come to the market, the real users to the market, because ultimately for whom the commodity market is there. The commodity market is for the real users, and for providing, it provides a hedging platform. So if hedgers are not there in the market, then there is no use of the market. So at this point of time, there are hedgers. I'm not saying there are no hedgers, but definitely it will be desirable to have much more number of real users in the market. So these are the two. And third thing that we would like, that the spot price discovery for the purpose of settlement of the futures contract has to be much more refined. So we are going to improve our polling process.
Okay. Mr. Agarwal, now moving on to the equity markets. To begin with, if I could start with the current regulatory changes in the framework that you have made to the P notes, one issue which always has been sensitive when it comes to Indian equity markets. Sebi, in more than one way, after the November 2014 changes, if I am right, always had the option of asking an FPI who's the end beneficiary when it comes to P notes and getting the KYC if required. Now, is it that you have put in more checks and balances and made it mandatory to submit in a particular format on a monthly basis? A, and B, do you think this time markets in that sense were much more mature to take these changes into account and did not react in a particular way which our markets are used to when it comes to P notes?
Before I handle your question, I would like to mention two facts. Number one is that the situation at this point of time, as far as the P notes are concerned, is completely different from 2007. The exposure of the P notes has come down from 55.7% of the total
portfolio
assets under control of the FPIs to approximately 10%. So their importance is substantially reduced. Number two thing is that we had already put in a very robust mechanism, particularly after November 2014 circular, which was good enough. But still, the SIT pointed out a few deficiencies. So just to rule out any possibility of misuse, we have tightened those loose ends also. So basically, what we have done, we are asking that we are going to capture the intra-month transfers also. We are going to we have mandated the P note holders to take a permission of the FIs before transfer, and we have applied the Indian norms for the KYC of the beneficial owners. So these are the three things which we have done. So I think this will be this will make the whole mechanism very robust, I think. And as far as your issue, as far as you're mentioning that this time markets behave very maturely, I would like to mention that Sebi was in constant consultation with all the FPI issuers. So we took all the we took all the P-note issuers on board, and the measures which we took, we had discussed the implications with them at great length. So when we came out with the provisions, I think there was
no element of surprise,
and there was absolutely no panic.
Mr. Agarwal, as you're rightly and interestingly putting out the statistics when it comes to P-note, it's hardly 10% as on March end of 2016. So do we see the way things are panning out, P-notes as an instrument getting faded away, say maybe in the next 3 to 5 years, or maybe over eventually a period of time, maybe P-notes can be phased out? Any line of thinking or deliberation that went while deciding these things?
Sebi has been working on making the process of FPI registration simpler and simpler. So as the process is becoming simpler, more and more investors may like to get registered as FPI. But we have to keep in mind that every investor who is coming through the P-notes is not having the wherewithals to get registered as FPI. For example, there are many funds who want a flavor of India. So just for taking a small exposure, they may not like to get registered as FPI at this point of time. Maybe in future they may like to come as FPI also. So this serves a purpose. So, but of course, I do admit that as the process of FPI registration is becoming simpler, maybe more and more investors may get registered as FPI. So the use of P-note may in future become still lesser. So that will, I would not be able to predict, but I think that this will depend upon the market.
Now, sir, coming to the other factor, we on Indian equity markets have always been dependent on foreign money or the FPI money, and that is where we have also witnessed the kind of volatility that we have been witnessing all this while. But at the same time, 2015 perhaps, if I am right, if I could say that, came as a year when clearly our domestic institutional investors, particularly the mutual fund investors, gave the much required counter, and we saw some amount of stability that could be maintained in the market because it was one of the highest years, the amount of money that mutual fund industry as a whole poured in. Sebi has indeed taken many steps when it comes to mutual funds. Do you think finally mutual fund industry, say going forward, will be in a position to offer that counterbalance to the FPIs in the Indian equity market, which always has been the final objective of the regulator or as policy makers?
Coming to the FIs, we have to understand that we need foreign inflows. So therefore, we have to welcome the FIs. As far as the volatility is concerned, it will definitely remain a part of the FI inflows, because whenever FIs come in the market, some kind of volatility has been seen. The reason for that is that first thing, the FIs have a very substantial percentage of the floating stock. They are holding in the Nifty stocks. Nifty stocks is approximately 23%, but in the vis-a-vis floating stock, it is approximately 50%. So they have a substantial chunk of the floating stock as far as the Nifty stocks is concerned. So their buy and sale is also more in the Nifty stocks. So when the Nifty stocks get affected because of their buy and sell, definitely it affects the whole market. Now the thing is that what is the remedy for that? Remedy for that is that we have to have much stronger counterparties in our domestic market. And number two is that we have to have long-term investors from the FIs, so that they are not indulging into day-to-day trading or coming in, coming out, going out. As far as the first issue is concerned, we are seeing a very positive development that mutual funds are becoming a very important counterparty. I may mention that after May 15, when the FIs were going out of the Indian market, then it was the mutual fund industry which was absorbing the sale of the FIs. Therefore, we did not see that kind of volatility which would have come otherwise. Now, as far as the second issue of long-term investors is concerned, at this point of time, we are having a mix. We are having short-term investors, we are having long-term investors among the FIs. But over a period of time, we will have to attract more and more long-term investors, so that they are long-term investors, so they provide more stability to the Indian market and do not cause much volatility. So this is the way we will handle volatility in future.
If I could ask you, when it comes to the mutual fund industry, glass is half full. Is this the right term to be used? The way mutual fund industry has chipped in the last 1.5 years?
It's what mutual fund industry has done in this last 1.5 year. That is very, very encouraging, and that is the desirable trend also, because we want more and more savings, financial savings, to come to the capital market, because we all know that the capital efficiency improves because the financial market, the capital markets provide for much more efficient intermediation of the capital. So we have to attract the retail savings to the market. Mutual fund is the best vehicle for the retail investors. So I think in future, our policy will be, as is the case even now, that more and more retail investors come through the mutual fund, and the corpus of the mutual fund industry grows further.
Mr. Agarwal, when it comes to mutual fund industries, particularly the debt side, we have seen certain issues popping up in the last 3 to 6 months, particularly because of the rating agencies giving a particular rating, and for some reason the ratings are downgraded all of a sudden, and the counterproductive effect on the debt side of the mutual fund holdings. Is that an issue that Sebi is worried about, and do we see some sort of tightening happening, particularly on the rating agencies?
We have taken cognizance of the developments which have taken place in the last few months, and we are deliberating on various issues relating to the rating by the credit rating agencies, because their functioning affects has a much wider impact on the market. So we are deliberating on few issues, and in future you will see that we will tighten the supervision of the credit rating agencies.
Which means, is this the whole objective, to ensure that the rating agencies are made much more accountable in the terms of, say, upgrading or downgrading that they do to a particular company?
I would not be very specific at this point of time, but I would like to mention that definitely the new guidelines which will be issued, which we are of course deliberating on, we are discussing with credit rating agencies also. These guidelines will definitely take care of more transparency and accountability.
If I could just ask you, sir, how soon or could we see this? Any timeline that you could say?
I think very shortly.
Okay. And so finally, before I could wrap this up, the one issue that I want to touch with you only specifically because also this involves a lot of investors, the whole NSCL scam that happened way back, close to 3 years back now. Sebi at its remittal road, because it was a spot exchange. Sebi did whatever necessary after the FMC order on FTIL and Jignesha. Now the special investigation coordination team that has been set up has also asked market regulator Sebi to look into the role of brokers who are trading in NSCL. What is going to be Sebi's stand, and what is going to be the Sebi's line of action when it comes to dealing with the brokers who are trading in NSCL?
We have already initiated action in the case of the brokers who are working in our market, and we have already ordered for the audit of such brokers. So I cannot give you any specific information on this issue, but whatever has been the direction, we have been moving in that.
Mr. Agarwal, once again, thanks a lot for sparing this time. Pleasure talking to you.
Thank you very much.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.